All of these factors are driving down the stock market. You want to know something? I'm cashing in on it. And if you're smart, you'll cash in on it too. What's up, YouTube? It's your girl, Lakin Banks, and welcome back to my channel. I did switch up my hair a little bit, just did a little updo. Hope you guys like it. But back to the video. Today, I'm going to be talking about my favorite Canadian dividend paying stocks. Now, I know that's a mouthful, so let me break it down for you. Canadian and dividend paying. In this video, I'm going to be talking specifically about Canadian stocks because there are some awesome ones on sale right now. Lakin Banks, what do you mean they're on sale? The stock market ain't no corner store. I get it, guys, I get it. This is what I'm trying to say. Unless you've been living under a rock or spending all your time watching Tiger King, you've noticed that we're in an economic crash right now. Stock market has tanked, restaurant, airline, bank stocks, and also oil has crashed. So if you're wondering why you can fill up your gas tank for so cheap, it's because Saudi Arabia and Russia are in a price war. All of these factors are driving down the stock market. You want to know something? I'm cashing in on it. And if you're smart, you'll cash in on it too. Now, I'm not a financial advisor, but I'm just telling you what I did with my money, and I invested thousands of dollars in these stocks. So I'm going to tell you my favorite Canadian stocks that are paying an awesome dividend right now. Now, what is a dividend? A dividend is a sum of money that a company pays to its shareholders, aka the people who've bought in the stocks. So, a dividend is paid on a regular basis, often every quarter or 4 times a year. So a dividend is a percentage of the profits that a company pays you for investing with them. Because when we purchase a stock, we own a small portion of that company. And if that company pays dividends, we are getting a cut of its profits. Isn't that amazing? Like, we're literally getting paid to invest money with that company. We're getting paid to be there. It's like some relationships, but we're not going to get into that. Now, not every company pays dividends. Because dividends are the profit that a company makes, sometimes the company just reinvests that. For example, Apple doesn't pay much dividends. Chipotle doesn't pay. They just put all that money back into their company. Now, this is why it's important to do your research and figure out, A, is the company paying dividends? B, how much dividend are they paying? And C, do they pay their dividends on a consistent basis? And has it increased over the years? These are questions that I'm thinking and researching when I'm looking for a stock to invest in. So now let's get into my favorite Canadian dividend paying stocks. First, we'll start with Canadian Natural Resources. Now, this stock trades on the Toronto Stock Exchange, symbol CNQ.TO. Now, if you're wondering what the TO is, it's because we're trading on the Canadian stock market exchange in Canadian dollars. Okay. Now let me tell you a little bit about this company. Canadian Natural Resources is the largest manufacturer of natural gas and crude oil in all of Canada. It transports and pumps oil in the United States. This stock has been decimated by the Saudi-Russia price war and the pandemic. Barrels of oil have literally hit historical lows and we're actually in the negative last month. Like, things are crazy right now. And during all of this, CNQ has continued to pump oil like nothing's been happening. They recently put out their reports for the first part of the year and they were in a $1 billion loss. Now, this might scare some people. However, they also reported that they have $5 billion in like assets and cash and stuff like that, and that's what keeps my faith in this company. So let's go a little bit more to their stats. CNQ is officially trading at 50% of its original price. Literally 4 or 5 months ago, it was at $40 a stock, and now it's at $20 a stock. If you got it a few weeks ago when the pandemic really hit the stock market hard, you could have got this stock for almost $11 a share. This is a steal. It is 50% lower than it normally is, and this stock hasn't been this low in 15 years. Now, another term I'm gonna lay on you guys is payout ratio. What is a payout ratio? That is the percentage of profits that a company pays to its shareholders, which is you and me. Isn't that so sophisticated? We are shareholders of a company. So let's say a company made $100. If their payout ratio is 50%, that means they're paying $50 to you and me. And the other $50 they are reinvesting back into their company. Now you want the payout ratio to be low because that means they're just paying a bit of their profits to us and they have a lot of money left to reinvest in their company. If the company makes $100 and it's paying 100% to its shareholders, that means there's no money left for them to grow, for anything else. And if something bad happens and the economy tanks, well, they're going to cut their dividend to reinvest it in the company. So just to recap, you want a company that has a payout ratio of less than 50%. That is a safe number for me, and that's the way that I've been investing. So the payout ratio for C&Q is 33%. This tells you that they have large cash reserves, like they already reported. Its dividend is about 7%, and it pays you about 42 cents per share. Despite their reported losses, they continue to pay their dividend. Now, this is an important thing to realize because a lot of its peers, like Suncor Energy, for example, when they stopped making enough money, they cut their dividend. C&Q, however, has continued to pay their dividend despite a $1 billion loss. That's what keeps my faith in this company. And I believe oil prices will eventually rise. It might not be until 1, 2, 3 years maybe from now, but eventually this will go back up. That's what makes this such a great buy. So just to recap, C&Q is half price, its payout ratio is less than 33%, and its dividend is amazing, paying 42 cents per share, and that's 4 times a year. So my second favorite Canadian stock is Bank of Montreal. Bank of Montreal trades on the Toronto Stock Exchange for BMO.TO. Now, Bank of Montreal, or BMO, is the 4th largest Canadian bank and the 10th largest bank in North America. BMO has well-diversified operations, including business banking, personal banking, and it actually has a strong U.S. presence as it acquired Marshall & Itsy in 2010. Now, BMO has been the hardest hit by this pandemic compared to the other 6 big banks. You want to know why? Because it has the most exposure to the oil and gas industry, which I just discussed in the other point. Now, I know Canada's economy is slowly opening back up, but if you are investing in the banks, it's going to be a long-term investment. You're looking at 3-5 years from now for this to fully regain. However, this bank stock is paying literally one of the best dividends I've seen out there. So let's get to some more stats. BMO is currently trading at about 30% of its original price. A few months ago, BMO was at $100 per share. Now you can get it for $68 to $70 per share. Its payout ratio is 47%, which is less than 50, so you know they still have great cash reserves, and they're unlikely to cut their dividend. BMO's dividend is about 7%, but they are paying $1.06 per share. That is literally unheard of. $1.06 per share. 4 times a year. This is such an amazing price, and you know bank stocks are not going anywhere. BMO has actually been around for almost 200 years, and they have never, ever missed a dividend payment. That means it's paid it during the Great Depression, during the World War. It has been consistent and has consistently increased its dividend. This is what makes this stock so desirable for me because I know no matter what, it's likely going to pay that dividend. And at $1.06 per share, that is amazing prices. Canadian banks are held to much higher standards than US banks, so they are an awesome blue chip stock to get into. So if you have the patience to ride the wave over the next few years, I would recommend you investing in C&Q and BMO. So there are some other great Canadian stocks that pay dividends. These ones, which I've been getting some questions about, proceed with caution. So QSR, which is Restaurant Brands International, is the company that owns Tim Hortons chains, Popeyes, and Burger King chains. Now you're thinking, every Canadian loves Tim Hortons, we all go there, blase, blase, blase. So this stock was also hit hard by the pandemic because people weren't leaving their houses. They weren't doing their regular routine of going to get coffee, going out. So this stock dipped. It actually pays a great dividend. However, its payout ratio is at 85%. Now, if you remember what I told you at the beginning of the video, that means if they're making $100, 85% of that is going to its shareholders, which is me and you if we invested in that stock. And only 15% is left to keep the company going, to pay for things, and to reinvest. So when its payout ratio is that high, we get nervous that they might cut paying us just to help their company stay afloat. Another company is Enbridge, which trades on the Toronto Stock Exchange for ENB. Now, a lot of people like this stock because that is where we Canadians pay our utilities to. On my bill, it says Enbridge, okay? So you're thinking, wow, this isn't going anywhere. It's a great utility brand. It's true that it's not going anywhere, but it's paying over 100% of its profits to its shareholders. So that means it might cut its dividend at any time. So if you're specifically looking for dividend stocks, I would invest in the ones with a low payout ratio, like our CNQ, like our BMO, right? Because not that much money is rolling into them. Now, I just want to thank you guys so much for watching my videos. Leave a comment, smash the like button, tell me what you like, tell me if you liked my hair, and invest your money. So if you're looking for my personal journey, I've invested about $3,000 into CNQ and $3,500 into BMO. I believe in these companies. So my BMO stock is still down because it hasn't gone up, but my CNQ, I invested when it was $14 and now it's at $22. So I've made over $1,000 on that stock when I choose to sell it. But I'm riding it out until this price war is over and things go back to normal because I know that stock is going to be worth a lot, but that stock is going to triple. Mark my word. Like I said, thank you guys so much for watching and stay tuned for the next video. I'm out of here, guys.